Welcome back to Talk Kickers, everybody. Today we're going deep on SelectQuote's second quarter 2025 earnings call.
Yeah, this one was definitely on our radar.
They just came out of a really crazy Medicare Advantage annual enrollment period.
It was wild.
A lot of fascinating stuff to unpack here.
Yeah, definitely a lot of eyes on SelectQuote to see how they weathered the storm of that AEP.
Yeah, the numbers are pretty impressive.
Yeah, no kidding. Some surprising results for sure.
Especially considering the Medicare Advantage market was a total whirlwind this year with all those policy terminations.
Definitely a tough environment for everyone.
But SelectQuote actually managed to increase their policies sold,
Yeah, you read that right.
even though they had fewer agents.
And that's the big question everyone's asking.
How did they pull that off?
Well, it looks like their strategy of focusing on experienced agents is really paying off.
So quality over quantity.
Exactly. They're seeing a much higher close rate compared to last year.
Was it like 24% higher?
Yeah, 24% higher close rate.
And that's with 22% fewer agents,
Yep. They're doing more with less.
which is impressive no matter how you slice it.
Definitely a sign of efficiency.
So before we go any further, can you just give us a quick reminder of how SelectQuote's business is structured?
Sure. So they've got two main segments.
Okay.
Senior, which focuses on Medicare Advantage plans,
Right.
and then healthcare services,
Hmm.
which is mainly driven by their prescription drug delivery service, SelectRx.
Okay. And of course, the senior segment went through a lot this past AEP.
Definitely.
And so what were the key takeaways from the call about their performance?
Well, despite all the craziness, they actually exceeded their revenue expectations for the senior segment.
Really?
Hit $256 million for the quarter,
Wow.
which is a 19% increase year over year.
That is phenomenal considering the market conditions.
Yeah, they really navigated that whole AEP disruption well.
So what exactly drove that revenue growth?
Well, obviously, the increased close rates from those tenured agents played a big role.
Right.
But they also got way more efficient with their marketing spend.
So fewer agents, more policies sold.
And they're doing it all more cost effectively.
What kind of impact did that have on their profitability?
Their senior segment adjusted EBITDA margin hit a whopping 39% for the quarter.
Oh, wow.
Big jump from 32% last year.
That's a huge increase.
It's a clear sign that their strategic shift is working.
Okay, let's dig into this AEP disruption a little bit more.
Yeah, let's get into the weeds.
You talked about all these policy terminations?
It was definitely a headache for consumers.
I can only imagine.
Around 6% of Medicare Advantage policies got terminated by carriers.
6%? That's wild.
Way higher than the usual less than 1%.
Yeah, that's a big difference.
So SelectQuote recognized that they needed to step up and help their customers through all this.
So what did they do?
They didn't just sit back and watch their customers scramble.
I would hope not.
They were proactive. They reached out to customers whose policies got the axe.
Okay.
And they actually guided them through the process of finding new plans that still met their needs.
It sounds like they went above and beyond what was expected.
They really did.
Did they manage to hang on to many of those customers?
They did a really impressive job.
Yeah.
They recaptured over 30% of customers whose policies were terminated.
Seriously?
That's better than they even projected internally.
It's remarkable they were able to do that considering they weren't even obligated to.
It really highlights their commitment to customer service.
And that's a good sign for their long-term growth.
Absolutely.
Okay, so big wins for SelectQuote's senior segment.
Huge wins.
They exceeded revenue expectations.
Yep,
Significantly boosted their EBITDA margin.
for sure.
And demonstrated a real commitment to taking care of their customers.
No doubt about it.
But they've got that other segment too, right?
Yep.
The healthcare services segment.
With SelectRx, their prescription drug delivery service.
Yeah, how's that part of the business doing?
SelectRx is killing it.
Really?
They blew past a $700 million revenue run rate this quarter.
$700 million.
They're on fire.
What's driving that kind of growth?
Well, for starters, membership is going through the roof.
Makes sense.
Up 54% year over year.
Wow.
They're at 97,000 members now.
Those are serious numbers.
And their revenue's keeping pace.
Yeah.
Up 64% year over year to $183 million in Q2.
I'm sensing some synergy between their senior segment and SelectRx.
You're picking up on something there.
Are these two businesses operating in silos?
Not at all. They've actually found a really clever way to connect them.
Okay, I'm all ears.
Think about it.
Okay.
Someone comes to SelectQuote for help with their Medicare Advantage plan.
Which falls under the senior segment.
Right. But that same person might also have needs related to prescription drugs.
It's a natural connection, especially for seniors.
Exactly. And SelectQuote has created this smooth handoff between the two segments.
I see, I see.
A lot of their SelectRx members actually started out as customers who came to SelectQuote for help with Medicare.
So they're cross-selling their services.
They're capitalizing on that existing customer relationship.
That's smart.
It's a brilliant way to offer a more comprehensive healthcare experience.
And it seems to be working, judging by the growth of SelectRx.
It's definitely resonating with customers.
So strong performance across both segments.
Absolutely. Senior and healthcare services are both firing on all cylinders.
I'm guessing that means good news for SelectQuote's overall financial results.
You bet.
What are we looking at?
They reported $481 million in total revenue for Q2.
Nice.
Which is a 19% year-over-year increase.
Primarily driven by SelectRx, I imagine.
Yeah, SelectRx is the main growth engine right now.
What about profitability?
Adjusted EBITDA came in at $88 million.
Not bad.
Up 30% from last year.
Healthy growth.
With a margin of 18%.
Solid numbers overall.
They beat analyst expectations.
Now, I was also really interested in those strategic moves they're making with their capital structure.
Yeah, some big moves there.
It sounds like they're setting themselves up for even more growth in the future.
They're definitely playing the long game.
So one of the big things that jumped out at me was that $350 million preferred equity offering they announced.
Right, that was a big one.
And this wasn't just about raising capital, was it?
It was strategic. It was about gaining more control and flexibility.
Intriguing. Tell me more.
So they secured this investment from some major players.
Like who?
Bain Capital, Morgan Stanley, Private Credit, and New Light Partners.
Those are some serious names.
These aren't just passive investors, they're strategic partners.
They vote of confidence.
Yeah, it's a huge endorsement of SelectQuote's vision.
So what does this investment mean for their future?
Well, it gives them more autonomy.
Yeah.
More flexibility to invest in growth initiatives.
Especially in that rapidly expanding healthcare services segment.
Exactly. They're not just looking for a cash infusion, they're positioning themselves for long-term growth.
Smart. What else are they considering?
Well, they mentioned follow-on securitizations.
Securitization.
Yeah, they completed their first $100 million securitization of Medicare Advantage receivables back in October 2024.
And how'd that go?
Seems like they're happy with the results so far.
Can you break down what securitization means for those who might not be familiar?
It basically involves taking their Medicare Advantage receivables,
Which are?
the future cash flows they expect from customer premiums,
Yeah.
and they pull those together and sell them to investors as securities.
So they're turning future revenue into upfront capital.
Exactly.
Okay. Why would they want to do that?
Well, it's a smart way to unlock the value of those future cash flows
Makes sense.
and free up more capital for other investments.
Especially since their Medicare Advantage receivables are considered relatively low risk.
Right, so they can get favorable financing terms through securitization.
Sounds like a clever way to manage their finances and fuel their growth plans.
It's all about strategic capital allocation.
What kind of impact have all these capital actions had on their financial outlook?
It's already looking good.
How so?
They project their ongoing cost of capital will decrease by over 150 basis points.
That's significant.
And their annual cash interest obligations will decrease by about $30 million.
So that's money they can redirect towards growth initiatives.
Exactly. It sets them up for a really strong financial future.
Now let's talk about those growth opportunities.
It's the fun part.
Where do they see the biggest potential?
They're really focused on two key areas.
Okay.
First, they see a ton of room for organic growth in their core Medicare Advantage business.
With the aging population and the growing popularity of Medicare Advantage plans, that makes sense.
Right. And they've already proven they can win in that market.
Even during tough times like this past AEP,
Exactly. Now with their optimized capital structure,
they're in a stronger position to grab even more market share.
for sure.
And what about their healthcare services segment?
That's where things get really exciting.
Uh-oh.
They're seeing amazing momentum with SelectRx.
We already established that.
And they're actively exploring other potential service areas within healthcare.
Okay, spill the beans. What are they considering?
Well, they're being a little tight-lipped about the specifics.
Of course they are.
But they did mention exploring Potential expansion into things like telehealth
Interesting.
and chronic disease management.
Those are some hot areas right now.
They're positioning themselves to ride some major healthcare trends.
So they're not content with just being a successful Medicare Advantage broker.
They want to transform healthcare.
I love their ambition.
It's what makes them so compelling to watch.
We've covered a lot of ground here.
We have strong financial performance, savvy capital maneuvers, exciting growth plans.
What's the big takeaway for investors?
It's all about their ability to adapt and thrive in a turbulent market.
They really navigated a tricky situation, both for themselves and their customers.
And their financial results prove it.
They've definitely shown resilience and a commitment to their customers.
No doubt about it.
But I'm curious about their decision to reduce their agent force.
Yeah, that raised some eyebrows.
On the surface, it seems counterintuitive to reduce your sales force.
Especially during a period of disruption like this past AEP.
So why do you think they did it?
I don't think it was just about cutting costs.
You think it was more strategic?
Definitely, they're focused on quality over quantity.
When it comes to their agents,
Exactly.
they want experience and expertise.
Which leads to better service and better close rates.
So their bet is that a smaller, more seasoned team can be more effective.
And so far, it seems to be working.
It's a high-risk, high-reward strategy,
It is.
if they can pull it off.
They could see significant cost savings and higher profitability.
But if they lose key agents or struggle to attract top talent,
It could backfire.
definitely something to keep an eye on.
We'll be watching that closely.
Okay, I think it's time to put on our speculative hats.
You know I love this part.
It's time for our outrageous yet plausible trade ideas segment.
Hit me with it.
All right, so SelectQuote mentioned exploring additional capital structure actions.
Right.
What if
What if?
they spun off their SelectRx division into a separate, publicly traded company?
Bold move.
Think about it.
Okay, I'm thinking.
This could unlock some serious shareholder value.
How so?
It would allow each business to focus on its core strengths
Interesting.
and attract investors who are specifically interested in what they have to offer.
I see what you're saying.
Investors who are bullish on the high-growth potential of the pharmacy delivery model.
They might be more likely to invest in a standalone SelectRx.
Right. And those who believe in SelectQuote's established Medicare Advantage business.
They could focus their investments there.
It would give both businesses more targeted access to capital
Smart.
and allow them to tailor their strategies to their specific opportunities.
It's a bold move.
But it could be a game changer.
Definitely.
Okay, but before we go any further,
Reality check.
this is all hypothetical.
Yeah, just for fun.
Just entertainment purposes only.
Not financial advice.
Right. Do your own research and all that.
Always. Consult with a financial professional before making any investment decisions.
But it's fun to think about the possibilities,
Right.
right?
Absolutely. It just highlights the exciting potential for SelectQuote.
Well said.
They've got a lot of interesting ventures.
We'll have to wait and see what they do next.
I'm definitely curious to see their next move.
Well, stay tuned for part 2 of our deep dive into SelectQuote's Q2 2025 earnings call.
Okay.
We'll be exploring their overall philosophy and analyzing those broader trends shaping the healthcare industry.
Can't wait.
So much more to unpack.
It's going to be good. Welcome back to Talk Tickers. We're continuing our deep dive into SelectQuote's Q2 2025 earnings call.
We covered a lot in the first part.
We did. Their financials, those capital structure moves.
Their growth plans.
But I want to talk about the underlying philosophy.
Yeah, what makes them tick? What's that secret sauce?
I think a lot of it comes down to their focus on data and technology.
So they're not just about human touch.
It's more about combining that human expertise with powerful technology,
So they found that sweet spot
where technology actually enhances those human capabilities.
rather than replacing them.
Right. They're not trying to automate everything.
What about their marketing? How are they reaching their audience in such a crowded market?
They've been smart about diversifying their channels.
So it's not just one thing,
They use a mix of traditional methods like TV and direct mail,
but they're not afraid to embrace digital strategies.
especially when they're trying to reach those tech-savvy seniors.
So they're meeting their customers where they are.
Whether that's on their couch watching TV or browsing the web on their tablet,
It's all about being adaptable.
and reaching the right people with the right message.
Now, you mentioned earlier this revenue to CAC metric.
Revenue to customer acquisition cost.
Yeah, can you break that down for our listeners who might not be familiar?
Sure, it's basically a measure of efficiency and scalability.
Okay.
It tells you how much revenue a company generates for every dollar they spend on acquiring new customers.
So the higher the ratio,
The more bang for your buck you're getting with your marketing.
SelectQuote has been steadily increasing their revenue to CAC ratio.
Yeah, they've been doing a great job in that area.
It shows they're getting better at attracting those high-value customers.
Without overspending on marketing.
They're becoming more targeted and more effective.
And as they continue to grow and expand their services,
They're in a good position to leverage that efficiency even further.
it's all about building a sustainable and profitable business for the long term.
Okay, let's zoom out a bit.
Big picture time.
We've talked a lot about SelectQuote's specific strategies.
Their tactics, their numbers.
But what does their success tell us about the bigger trends in healthcare?
That's a great question.
Like, what are the key takeaways here?
I think one of the biggest things is that there's this growing demand for personalized guidance.
In healthcare,
Yeah, it's becoming more and more complex,
it can be overwhelming for people.
especially when it comes to things like insurance and choosing the right plan.
People need someone they can trust to help them navigate all the options.
And that's where SelectQuote's agent-led model really shines.
It's about more than just selling a policy.
It's about empowering customers to make informed decisions.
To choose what's best for their individual needs and circumstances.
And I think this focus on personalization and customer empowerment is a trend we're going to see more and more of.
So it's not just about technology and innovation.
It's about bringing back that human element.
Creating a more human-centered healthcare experience.
Exactly. And SelectQuote is showing us how technology can actually enhance those human connections.
By making things more personalized.
More empathetic.
It's a good reminder that healthcare is ultimately about people.
At the end of the day, it's about caring for people.
Now, we all know healthcare is a complex industry.
It's not always the easiest to navigate.
And it can be slow to change.
There are a lot of moving parts.
What challenges do you think SelectQuote might face as they try to disrupt the status quo?
Well, regulatory uncertainty is always a big one.
Healthcare regulations are constantly changing.
It's like trying to hit a moving target,
SelectQuote needs to be agile and adaptable to keep up.
which can be tough when you're trying to scale up quickly.
What about competition?
The healthcare space is crowded.
You've got established giants and all these new startups.
Everyone's vying for a piece of the pie.
How does SelectQuote stand out?
How do they maintain their edge?
That's the million-dollar question.
I think their key differentiator is that blend of human expertise and technology.
They've found a way to make them work together.
They're not pitting humans against machines,
They're finding ways for them to complement each other.
and that creates a synergy that's really hard to replicate.
They also benefit from their strong brand reputation
They've built a lot of trust with their customers.
and their data-driven approach.
They're constantly analyzing information and making adjustments.
It's all about continuous improvement.
They're not afraid to experiment and try new things.
Let's talk about the aging population.
That's a huge factor in all of this.
How is SelectQuote positioning itself to capitalize on the growing demand for senior-focused healthcare services
They're right in the sweet spot.
as the baby boomers age?
The demand for Medicare Advantage plans is going to skyrocket.
And SelectQuote is ready to ride that wave.
They're investing in strategies to capture a big share of that market,
They're expanding their agent force,
refining their marketing.
developing new services that cater specifically to seniors,
It's all about meeting the needs of that growing demographic,
and they're committed to innovation.
always looking for new ways to improve and expand.
They've hinted at exploring new healthcare service verticals.
Telehealth, chronic disease management.
What other game changers do you see on the horizon?
Well, telehealth is definitely a big one,
It's growing rapidly.
and it aligns perfectly with SelectQuote's mission of simplifying healthcare.
It's convenient, it's affordable.
And more seniors are becoming comfortable with technology.
I think they could become a leader in senior-focused telehealth
They already have that strong foundation of trust.
and the tech expertise to create user-friendly virtual care experiences. What about chronic disease management?
That's another area ripe for innovation,
With the rise of chronic conditions,
like diabetes and heart disease.
there's a huge need for personalized support and care coordination.
And SelectQuote is in a unique position to provide that.
They have all this data on their customers.
Their health needs, their preferences,
They can use that to create tailored care plans.
and connect seniors with the right resources.
They could even partner with healthcare providers
And pharmaceutical companies
to create those integrated care solutions.
that address the full spectrum of a patient's needs,
It's about taking a holistic approach.
and ultimately improving health outcomes for seniors.
So what are the key things investors should be watching for?
What are those red flags or green lights?
as SelectQuote executes its growth strategy,
Well, agent retention and recruitment is crucial.
especially after their decision to reduce the size of their agent force.
They need to make sure they can attract and retain top talent.
Customer acquisition costs are another big one.
They've been efficient.
But they need to maintain that as they enter new markets and launch new services.
It's about balancing growth with profitability.
And we need to watch their progress in developing those new healthcare service offerings.
Will it be telehealth? Chronic disease management? Something else entirely.
They've hinted at some exciting possibilities.
We'll see how quickly they can bring those to market.
And of course, they need to navigate that complex regulatory landscape.
Healthcare regulations are always in flux.
So they got to stay agile and adapt quickly.
It's a constant challenge.
But SelectQuote has shown they're up to the task
They're a resilient company
with a clear vision.
and a track record of success.
It'd be interesting to see how they continue to evolve.
And shape the future of healthcare.
They're definitely a company to watch.
So much potential.
Don't miss part 3 of our deep dive
We'll be back
to wrap up our analysis.
and explore what SelectQuote's success might teach other industries about engaging with a rapidly aging demographic.
Until then, keep those brains buzzing. Welcome back to Talk Tickers, everyone. It's time to wrap up our deep dive into SelectQuote's Q2 2025 earnings call.
It's been a wild ride.
We've covered their financials, their strategies, their growth plans.
A lot to unpack.
But before we sign off, I want to go back to something you mentioned earlier,
What's that?
the human element.
The people behind the numbers.
Beyond all the data and the strategies,
There's a whole team driving SelectQuote's success.
what impressed you about their leadership and culture?
I was really struck by their passion for serving customers.
It's genuine.
You can tell they're not just focused on profit.
They actually care about helping seniors navigate the healthcare system.
And find solutions that really meet their needs.
That commitment to customer care was so clear during the AEP.
Yeah, with all those policy terminations,
They went above and beyond to support those customers.
even though they didn't have to.
It says a lot about their values.
And it's smart business,
Happy customers lead to happy employees.
which leads to better results.
It's a win-win.
A positive feedback loop
It's refreshing to see a company that gets it.
that prioritizes both customers and employees.
Okay, let's look ahead.
Crystal ball time. What are your predictions for SelectQuote's future?
What should investors be watching for?
What milestones are on the horizon?
Well, I think we'll see them continue expanding in the Medicare Advantage market,
Makes sense.
maybe through acquisitions or partnerships.
And of course, we can't forget about their healthcare services segment.
That's the wild thing.
What new ventures will they explore?
Telehealth, chronic disease management, who knows?
They're not afraid to innovate.
They're disruptors.
I have no doubt they'll keep pushing boundaries.
And redefining what's possible in healthcare.
Here's a thought I want to leave our listeners with.
Okay, hit me.
SelectQuote has mastered connecting with seniors,
A demographic that's often overlooked.
especially in our tech-driven world.
What can other industries learn from them?
That's the big question.
I think the key takeaway is this:
Technology should empower human connection.
not replace it.
SelectQuote found that balance.
They blended technology with personalized service and created a winning formula for engaging with seniors. It's a lesson for any business.
That wants to connect with a generation that values authenticity.
Trust and personalized experiences.
Those things still matter.
And on that note, we'll wrap up our deep dive into SelectQuote's Q2 2025 earnings call.
It's been a great discussion.
SelectQuote is a company to watch.
They're not just playing the game.
They're changing it.
Thanks for joining us on Top Tickers.
Until next time, keep those brains buzzing.